Welcome back, dear friends, to the fifth edition of NAREDCO and APREA's Real Estate and Infrastructure Investors Summit 2020 with Anarock as our knowledge partners and supported by Primus Partners. I would like to thank our sponsors led by State Bank of India, without whom this summit would not have been possible. As it's the last day, I wanted to sincerely thank the team at NAREDCO and Anarock who helped put together this mega event, especially the team at NAREDCO Secretariat, who despite their personal circumstances continue to work to put together this event for all of you. A very special thanks to the team at Concept, our agency as well. Friends, day 3 is certainly power-packed, and before I invite my guests, I would like to remind all of you to type your questions in the Q&A box, and also please mention your email address. I welcome back Niranjan, Hiranandani ji, Ashok, Mohanani ji, and Tara ma'am, who did join us yesterday as well, and now is on the other side of the table. We welcome our keynote guest, Shri Sreenivasulu Setty, the Managing Director at State Bank of India, who's looking into retail and digital banking with an additional charge of stressed assets vertical as well. Mr. Setty has a career spanning over 3 decades, has rich experience in corporate credit, retail banking, and banking in developed markets. Well, prior to this role, he was heading the stressed assets resolution group of the bank and was responsible for resolving the stressed assets portfolio of the bank across the country in different sectors such as power, infra, auto, telecom, etc. I now request Hiranandani ji to say a few words, please.
A very good afternoon to you all. Thank you very much, Neetu Singh and APREA, for the wonderful cooperation that you have had and the leadership role that you have personally shown in terms of it and the kind of programs that you have created. Thank you very much, Neetu Singh. We will always remember you, and we hope that this cooperation with APREA will continue with NAREDCO.
Certainly, sir.
A very good afternoon, sir, Mr. Shetty. It's a delight, happiness, and privilege to have you with us here today. State Bank of India carries a sterling role in the housing sector. Sterling role because today you have taken up the leadership in terms of what the people on the ground want, the housing loan, and the way they look forward to it. With the lowering of the interest rates that you have done, the home loan segment are a delight as far as State Bank is concerned. And certainly we as a community in terms of NAREDCO are extremely obliged to your bank and financial institutions. So always being proactive. Proactive because not only do you give a lower rate of interest, but every time there is a correction by the Reserve Bank of India, you are one of the first in order to implement that a downward benefit to go for the homeowners. On the commercial side too, the proactiveness you have shown in terms of helping this sector is really wonderful, and State Bank of India's role in this part cannot be underestimated. It's a tremendous job. The third part of it is the role done by SBI CAPS in terms of the Swami Fund, which has been done. And this was done at the insistence of NAREDCO, which represented to Housing and Finance Ministry. And then a contribution, I believe, of about 10,000 crores was also done by the central government in order to participate in this event. So a large amount of work, positive work by State Bank of India, and is also important. Since you have had the experience of stressed assets, we can only share with you 2 stories. One, that when I talk to people who are doing and handling stressed assets, they've always said that the least amount of problem in reconciliation is always when it is backed by property. And that is one of the stories that I keep on recounting to every banker, that as far as banking is concerned, it is this, out of all the segments, I do believe that real estate is real. So you always have a real asset at the back of it, and that is how it has been done. And this is something there. And the second part of it, which is a story again, which I recount, is that the NPA in the home loan segment is the lowest probably in the entire world, which is less than 2%. And I think that is something of a kind of a record. It is also a part of not only the developers, but the psyche of an Indian who buys a home. So I think that is the second thing which is important. The aspect of future financing in the segment is a challenge. Challenge because of RERA, 70% of the money is per project wise is required to be escrowed, hence the requirements of funds. Second, the postponement of buying by many of the buyers today in view of the fact that there is zero GST at the end of the project if you have an occupation certificate. So the requirement of funds in respect of a project. So if I required, let's say, 50 crores of capital for building a project, today I require 150 crores to make a same project. And this requires a lot more funds into the marketplace. So all these factors are becoming relevant because we have to understand that we do need more capital and more debt in order to look at this part of the industry. So State Bank of India taking the leadership role also in the PMAY scheme, which has become very effective into the country, and also invested a lot of money in terms of that segment, which has become extremely successful. I was with Mr. Mishra just 1 hour ago on an ASSOCHAM platform when he was talking about the completion of these projects which are taking place through the country and which will be within time. So the segment of success in the PMAY scheme has been huge and all. We are, of course, now looking at the next segment, which is the model rent laws, which will mean that you will not only get housing, but also we will be getting rental housing to be backed both by institution and by the government. And we are expecting some fiscal benefits during this budgetary time. So all this and more from State Bank of India is something that we are always grateful to you, Mr. Setty. And we look forward to your giving us more ideas in this direction and what you look forward to us from NAREDCO, from the members of this fraternity, and how you in this difficult time. I can only tell you that if you have looked at the statistics which are available to you on site, construction and real estate had been one of the hardest hit sectors in the economy, and almost 50% setback has taken place, and especially because migrant workers went back to their hometown. Now they've almost all of them have returned back. So we are almost there back to normal. But obviously, many of the projects which have taken a hard hit will need support from you and the institutions in order to get back on track. So just now, I will hand over to our favorite Tara Subramaniam, who was also a mentor to my daughter when she first started her first apprenticeship. She did it under Tara Subramaniam. So obviously, and she did a very good job. So over to Tara.
Good afternoon. Before I start the task that has been given to me today, let me thank NAREDCO and APREA, especially Neetu, for placing their trust in me for this really important interview with our esteemed guest. Sir, a very good afternoon and a warm welcome.
Good afternoon, Tara.
We are all aware of the pain the world is going through since the beginning of this year. And for the last several years, real estate in India has been reeling under various obstacles, stress, and pain. Government of India, Government of Maharashtra, and RBI have in many ways extended various SOPs to revive the real estate industry, which include reduction in stamp duty, reduction in a rate of interest, especially for home loans, PMAY, not increasing the ready reckoner rate, relaxation of performance guarantee to 0% on all projects, reduction of securities deposit and retention money from 5% to 2%, and of course the Swami Fund. And as per the Deepak Parekh Committee recommendation, the Government of Maharashtra and MCGM are also considering lowering the cost of premiums for enhanced FSI, TDR, second staircase, etc., not only for Mumbai, but all of Maharashtra. And I'm confident that once this is done, other states shall also follow. That said, a lot more needs to be done, which has to come from financial institutions and banks and the developers themselves. State Bank of India is the largest commercial bank in India in terms of assets, deposits, branches, customers, and employees. As of June 30th, 2020, the bank has a deposit base of over 34 lakh crore with a CASA ratio of more than 45% and advances of nearly rupees 24 lakh crores. I don't even know how many zeros there are. SBI commands nearly 34% market share in home loans and nearly 35% in the auto loan segment. Bank has the largest network of 2,200 branches in India. With this kind of strength, all of Indian real estate industry is extremely hopeful for SBI to come forward a little further to help revive the industry. Sir, now with your permission, can I ask you the questions that I have prepared?
Please go ahead.
And I'm sure at the end of this session, there will be more hope for the industry. Many of the projects that are currently stuck are being undertaken by smaller developers who are operating as partnership firms or proprietary firms, which from what we hear do not meet with SBI's current policy of prospective borrowers. Can this be addressed so that a larger number of developers can avail loans from State Bank of India?
Yeah, good afternoon, Taraji. And also, first of all, let me thank NAREDCO for giving me this opportunity. Coming back to your question, this proprietorship and partnership norms are not unique to the builders. We have a cap on how much we can take exposure on this non-corporate borrowers, what we call non-corporate borrowers, which is across the segments, not only in the construction segment. Every segment we have for a proprietary concern maximum of 50 crores, and for partnership it is 100 crores. The idea is that the corporatization of the business activities has to happen. This was the idea behind this, and it is not meant for only builders. I request that whenever there is a critical mass which the business builders achieve, they need to corporatize their operations. I think this is the only purpose behind that. In fact, we have even don't consider LLPs as non-corporate, in the sense in case if somebody doesn't want to become private limited company, they can definitely look at converting themselves into LLP when their business requirements go up. I think this is the philosophy behind that, Taraji. And I have not heard anybody coming to me is that because of being proprietorship, I'm not getting a loan. Because see, most of the projects where people undertake, if more than one project is there, they normally get converted into a private limited company. But if anybody has got any issue in terms of partnership and proprietorship, they can reach out to us. We will work out with them.
Yes, sir, because this has been the perception of the people, and that's why I'm bringing it up, so that there is a certain amount of clarity where SBI's criteria is concerned.
Yeah.
Right?
Yeah.
Now,
yes.
Secondly, we also heard that you currently are not taking over performing loans from other banks and financial institutions and NBFCs. And even if you do consider such loans, then the term fixed for your loans are pegged for the same duration as given by the primary bank, which at this stage does not help the developers to complete the project. Can this philosophy of yours be changed a little bit, and you'll give a little longer term for the projects to be completed, sir?
Yeah, so there are two things, Taraji, what people need to understand. When there is a builder finance projects which move from one NBFC to another, the rules are different. When they move from NBFC to a bank or between the banks, the tenor cannot be enhanced. See, the takeover norms, generally most of the banks follow that. I think there is a regulatory requirement also. If I extend the tenor, the regulator believes that it is in a restructuring of the loan. Otherwise, what happens? There is a cyclical movement between the lenders. If the project is funded for 3 years, and then it moves to another lender for 5 years. So the regulator is very, very unhappy about this kind of moment. So we said that I'm comfortable taking over if the project is good, either from an NBFC or bank. I have absolutely no problem. But I can't give you a longer tenure. See, most of the movement should happen to take the advantage of the interest rate. I think other than that, there should not be any movement, right? Today, housing loans are moved from one lender to another, essentially to take advantage of the interest rates which are available. Or it could be something related to the servicing part. If they believe that SBI can give a better service, they can come to us. But this extension of repayment period beyond what is agreed upon by the original lender is something which the regulator is not comfortable with, and we will not be able to change the takeover norms. But as far as taking over a good project is concerned, there is absolutely no bar either from a bank or an NBFC. It is true that State Bank of India has always been a little more conservative in builder finance than many other NBFCs have been. I think for obvious reasons, like unless we believe in the builder. And today, I have very strong builder type portfolio. 16,000 builder types I have today across the country. 16,000 and growing. So, but the builder finance, we are very, very careful unless the builder's credentials are very well known and their ability to complete the project is established. We will be very careful on that, including the takeovers. But I can assure you, Taraji, that there's no bar on taking over from other banks or NBFCs, except that the tenor cannot be enhanced from the original tenor.
No, I appreciate what you're saying, sir. This is under normal circumstances. Given what the industry is going through for the last 6-8 months, I thought for a period of 18 months or something like that, for the next 18 months, if you all can reconsider, it would be great. But that's a call that obviously you will take.
Sure. We'll definitely examine that.
Yeah, okay. And the other question that I have is that you have a facility which is the inventor lending loan facility, which currently are being given to rated developers. Many of the mid and small size developers desperately also require this kind of facility, but do not meet your required criteria. Can SBI look at getting projects or assets rated instead of the developer, at least for the next 18-24 months?
So this issue is basically the builder who wants loan up to 50 crore rupees, he does not need builder rating at all. I think it is something which they should know. The builder rating kicks in only above 50 crore rupees. So the logic in this is that I think a lot of people ask me that, if the project is rated, why do you want a builder to be rated? I'm glad that projects are being rated, but our challenge is that, every loan attracts a capital allocation, as you are all aware. I need to allocate a capital. And this capital allocation calculation is based on the rating of the borrower, not the project. While the project rating helps me that, it is a good project, there is a good demand, and, it is located in a good place, the consumer demand is there, that all is established through your star rating. It doesn't help me to allocate the capital, where the borrower rating is mandatory as per the RBI regulations. So up to 50 crores, we are not insisting. Even if capital has to be allocated, we have no problem. But beyond 50 crores, we need a builder rating in order to ensure that the capital which we need to allocate is properly allocated as per the RBI regulations. I think this is something which I want through this medium to reach the builders, that it is difficult for any scheduled commercial banks not to have a builder rating. You go for builder rating and also have a project rating. So that in any case, as you mentioned, small builders, we are not insisting. If your exposure, I mean, the loan amount which you are taking from is as 50 crore rupees, we are okay not having the builder rate.
So there's only one question. Is it the loan amount should be 50 crores or is it the exposure of 50 crores?
Exposure means of my loan exposure.
No. Supposing he already has a loan of say 20-25 crores and he comes with a 50 crore.
Total exposure should be 50.
Total exposure should be 50 crores. Yeah, okay. So what advice would you give to the developers to better their position today, and what lessons must they remember from this downturn? I think we're all looking for some kind of pearls of wisdom from you.
I don't call it wisdom, but I think I deal with a lot of builders and home buyers across the country, as I think Niranjan ji has mentioned, and that we are the largest home loan provider in the country today, and we would soon be reaching 5 lakh crores by January. I think by far the largest home loan portfolio in the country. Apart from that, I'm glad that I think Niranjan ji has already again mentioned that our average ticket size is 35 lakhs, 32 to 35 lakhs. That means the target group what we are aiming at as a part of I don't consider home loan as a pure business. As a philosophy of SBI is that how do we reach as many people as possible? If you see that average ticket size of 32 lakhs puts so much pressure on our workforce across the country. But we thought that we will focus on making the home loans affordable to the common man. Today we have 39 lakh customers who avail home loan. 3.9 million people in the country have taken home loan from us. This is a humongous responsibility what we have in SBI. And I'm glad that agencies like NAREDCO believe in the ability of SBI to reach out there. But in the scheme of things, lenders are there, buyers are there, but the creators are the builders. They have to create good projects, and good projects which are timely delivered, and good projects which are having quality. I think if we maintain quality and the timely delivery. Today, if you see the overall scheme of things, why the builder community is blamed for all the ills in the construction sector today? Because they either have diverted the funds for the project which they've raised, or they have not been able to deliver a quality product in time. I think, like what I said, that as a lender, I believe that it is a greater good has to be kept in mind. The builders also have to believe. I think immense work which is the builder community is doing, the largest employment generation, largest wealth creation across the country. But it comes with a responsibility of providing quality product ultimately. I think this is one thing which I would definitely request them to take care. But the second part is that the builder and construction activity is highly dependent on migrant labor. It was very sad that when in pandemic hit, migrant laborers have gone back. I was asking in another panel, what could be the reason for this? And it has come out very clearly that it was not about infection, the fear of infection that the migrant labor have migrated back to their homes. They felt that nobody is there to take care of them when the project is shut down. I think there is a greater responsibility on the builder community to instill a sense of security among the people who are actually building these projects, right? Without them, nothing gets built. And if nothing gets built, I have no business to be in home loan business at all, right? So to realize the fact that all of us have to take care of one of the most important stakeholder, that is employee, and the construction employment. I think a huge amount of migration has happened. I'm glad that they have come back. Probably, I'm sure that most of the builders would have assured them that the security will be provided. They don't have to worry. That is the reason quick remigration had happened. But it is extremely important for all of us to ensure that the safety and security of the important stakeholder in the building community is protected. This is Tara. I think this is my one appeal which I would like to make.
Yeah, sir, I think the government is working on that. I think they're coming up with these very, very sensible rental housing schemes, which, have been being talked about, but it has to be done faster, I agree. But I think that kind of, infrastructure, and also if we can do something more like insurance, of course, they're all doing it, all the developers are doing it, but I think they need to be told, the construction workers need to be told that their medical needs are also going to be taken care of in case there is a problem. And I think today, after all this we've gone through, the developers have realized the importance of the laborers, and I'm sure they will do the needful. One last ask, sir, very, very important ask. Can SBI make long-term loan facilities available not only to developers but also to other banks, financial institutions and NBFCs, so that we can overcome the mismatch of the asset liability. And also now what's happened is all real estate projects for various reasons take more time than what it used to take. So can that be, because I think now one looks at only a 36-month period maximum, but I think we will have to start looking at 5-year term.
Yeah. So there are two things which I would like to say that, as I said, we are the largest home loan provider. We are also the largest lender to the NBFCs and HFCs.
Yes.
You see.
Yes,
and,
I know.
And we have supported this NBFCs and HFCs during the most difficult times, both by way of direct interventions as well as, the TLTRO, which the government has, RBI has come out, and the partial credit guarantee scheme, what the government of India had given. I think much of this monies have moved into the NBFCs and HFC space. But one more important development which had happened, I'm sure that would provide the necessary capital to home finance companies, housing finance companies, is the co-lending opportunity. See, they now for my priority sector loans, the home loans which qualify for priority sector, I can have a co-lending arrangement for a home finance company, which was not permitted earlier under the co-lending arrangement. So we are very seriously discussing with some of the HFCs, particularly for the PSL loans which they originate, that we would provide the capital and have 80-20 ratio, the 20% will remain with them, 80% we will fund it, so that the capital requirement of this HFCs is minimized. That is number one. And as far as the long-term loans, I think NBFCs, as I said, we are the largest provider and will continue to be supporting both the NBFC and HFC sector. And our focus on PMAY. No, I think let me tell you that we are the only bank which is permitted to be a nodal bank for the PMAY for our own loans. That means we are such a big in PMAY. We needed our own bank to be a nodal bank to pay ourselves the subsidy part. So I think we are really fully focused on developing this sector. More and more, you will see the initiatives from State Bank of India coming through. Thank you.
So I'm very glad that you're going to be doing this co-lending because, I'm on the board of JM Financial Home Loans. We already have a tie-up with 2 other banks for doing this co-lending. It has been a little successful. So I'm glad that we have another avenue with SBI so that more individuals will get loans.
Yes.
Because if we can do it together, nothing like it. Thank you, sir. And right, can I request Ashok Mohanani ji if he has any question to ask Mr. Setty?
So just one question. Yeah, I'm there. Can you hear me?
Yeah.
Yeah, one question which has 3 parts. So you know that our industry is, connecting with more than 250 ancillary industries. You also know that there are so many stakeholders involved, like the corporation, the government, the flat purchasers, the institutions. Now, can you do something? Can you recommend to the RBI to have reduce the risk weightage as far as real estate industry is concerned? This was my first, I would say, question or a request. As well as your Swami funds are superb, but can't we, look at a pari passu charge instead of a first charge? And thirdly, since we are governed by RERA, can the money be fungible from one project to another project, which is financed by the same institution? This way, at least the projects will be complete. The projects which are weaker in finance will get completed with the fungible money from the same institution. So this was my question to you and request to you, sir.
Thank you, Ashok ji. I think very, very relevant questions. I don't know how much time I have to respond to this. Tara ji?
1 minute, if you can, sir.
Please, we're all waiting.
I'll give a quick answer. I think first one on the risk weight, of course, it's been a industry demand for quite some time. I fully agree. I think Niranjan ji also had mentioned initially that this is one of the most secured industry to lend to, right? What has gone wrong with this is basically those people who have not followed the governance. And as an industry, I'm very, very supportive in terms of the multiplier effect the industry has. As you mentioned, 250 different industries are dependent on this and a huge employment potential. But I think the risk weights come from a different angle, in the sense that the regulator is always wary of asset price movement, like when you actually reduce and risk weights and a lot of capital is pumped into this, what happens to the asset prices? This is a concern which I cannot convince the regulator. You guys have to convince him, right? As a lender, we're always supportive in terms of helping the industry. But the regulator has a different view. You are mobilizing the public money, and we do not want you to lend in a manner which actually leads to the asset price bubble. This is the basic fundamental philosophy behind having a higher risk weights for real estate. That is one thing. But I'm sure at the appropriate moment, if I have got an opportunity, I will definitely flag with the regulator on this. The second part about the Swami Fund, yes, Swami Fund had an issue of, when people who are funding a stalled project, what comfort they should get. And it was envisaged that if somebody is giving a priority kind of funding, they should get a priority charge both on the asset and the cash flows. But it was very difficult for the existing lender to pass on those benefits to them. But currently, if I understand, Ashok ji, that on the security, fixed assets, we have agreed to give pari passu charge. It is not the priority charge now. That has been addressed. It is only on the cash flow, the priority lender will get a priority. And on the fixed assets, I think it has been agreed upon that the pari passu charge will be given. I may be wrong in that, but that is my understanding. And on the RERA fungibility, see, if you really see, we always lent to a builder earlier. It was never a project finance to start with. I think you can ask Niranjan ji also. It was always given to Hiranandani and company. You go and fund whatever project you want. I am giving a working capital limit of so much. But we found that when I'm actually giving such a omnibus facility, it was it was abused in the sense that we didn't have any clue what projects they're putting in, and there is a good project, there is a bad project, there is an ugly project, but my money is stuck because I'm not able to recover. So we moved from a such kind of running working capital facility to a project funding now, which actually, many of the builders want me to fund project basis, not on the builder basis. So it's a dichotomy which keeps on going. But currently, for a very good builder, I don't want to name, but I think builders of repute, we still give a running facility. We don't give a project facility. We give a running facility running into thousands of crores. And they're free to invest in any of the project. But for a mid-sized builder, I would be wary of giving such working capital limits. I would still go with the project-specific funding, sir. I hope I have clarified.
Thank you. Yeah, thank you very much. Of course.
Thank you, sir. Thank you so much.
Thank you, Tara.
Great. It's really been a good insight, sir. Thank you so much. Rajan, you want to say a quick thank you? You want to say thank you to Mr. Setty?
Thank you, Rajan ji. Thank you very much, and I look forward to another session like this.
Thank you.
Yeah.
Sir,
We should have another session soon.
Yes.
Thank you,
Definitely,
Mr.
Tara. Thank you very much. Bye.
Thank you, sir. Thank you.
Grateful, sir. Yeah.
Yeah. Thank you.
Thank you, Mr. Setty, and thank you all our dear guests. Tara ma'am, you were just superb, to say the least.
Thank you. Thank you.